This is one of the most deceptive weeks we've had in a while. And if you think it's obvious, you're already in trouble. Everything looks bearish right now. Sentiment is bearish, the options market is stacked with put wars. But at the same time, we've got inflation data and GDP coming in, which can completely shake the market. Over 50% of investors are already expecting downside in the next 6 months, which historically can actually slow the drop, or even lead to a reversal higher. On top of that, we're starting to see signs of strength in small caps, which could support a move while mega caps are under pressure. So this is not a simple week, it's a deceptive one. And if you don't understand all the possible scenarios going into this week, you're not ready, you're guessing. That's why you need to watch this entire video and be prepared for every possible outcome. My accuracy in the market isn't luck, and it's definitely not some kind of a superpower. It comes from preparation, from understanding every possible scenario, and knowing exactly how to act when I see it. I don't approach the market with ego, thinking I know what will happen. I approach it with humility, prepared to profit from whatever the market decides to do. Most people will watch this halfway, and that's exactly why they'll miss the move. Because this week, the edge is not in the beginning. It's in how everything connects. So if you're here, stay with me. I am not going to spend too much time on last week, because if you've been following the channel, you've already seen it played out in real time. I broke it down in the weekly video and then updated everything through the shorts during the week. SPY moved exactly as expected, from 630 to 655, driven by put wars into expiration. JP Morgan held the 38.1 Fibonacci support and pushed right into the 300 core wall. Carvana broke above 300 and pushed toward the next level near 330. So instead of looking back, let's focus on what actually matters now. Because I'm not predicting moves. I'm tracking positioning, preparing scenarios, and reacting when they unfold. Let's break down SPY for this week, because this time is where things get interesting. Across almost every daily expiration, we're seeing significant put walls, and especially into the weekly expiration, where there are two massive levels, around 630 and 615, each with roughly 120 to 130,000 open interest. That's heavy positioning, and it tends to act as strong support zones. At the same time, in the first 3 days of the week, we have relatively modest call walls building up in steps, around 660, 665, 670, even 680. So you've got downside pressure structurally, but also a path higher in the short term. Now add to that the macro, FOMC midweek, and then inflation and GDP data right after. That's where this starts to look manipulated. Because when positioning is this heavy and dealers are forced to adjust their hedging as price moves, you can get sharp non-linear moves in both directions. So the first scenario here is a push higher early in the week, into those core levels, as that hedging flow supports price, and potentially even continuation higher into the weekly expiration to keep those large put positions out of the money. That would be a classic squeeze scenario, especially with such heavy bearish sentiment in the market right now. But the second scenario is just as important. If the market fails to hold higher levels early in the week or reacts negatively to the macro data, those same positioning dynamics can flip, and we could see a sharp move lower, targeting those major put wars at 630 and even 615. That would be a fast move, driven by volatility expansion and repositioning. On top of that, oil has been pushing higher and looks stretched. So a pullback there could relieve pressure from equities, while continued strength could add more downside pressure. Now, inflation expectations are still elevated, and GDP is coming in weaker compared to the previous quarter. So fundamentally, this is not a clean bullish environment. So going into this week, I'm staying open to all scenarios. Slight bullish bias driven mainly by positioning and sentiment, but with caution, because the broader trend is still to the downside. Now let's translate those scenarios into specific stocks to watch. If we get the bullish scenario, continuation higher or squeeze, those are the names I'm focusing on. First, Robinhood. The stock is in extreme oversold conditions, sitting at the 61.8 Fibonacci support, and the options market is pointing higher, with core walls at 70 and 80 into the weekly, and 80 standing out as a major level on the monthly as well. So this could set up for a strong bounce toward that 80 zone. Second is SoFi. The stock recently hit a major put wall at 15, and now we're seeing core walls building up step by step up to 19, both weekly and monthly. If it reclaims 17, which is the first key level, that can open the door for continuation toward 19, where positioning becomes much heavier. And this is a name that can build momentum quickly if it starts moving. Third is Reddit. I mentioned this one before as a multi-week setup, and we're still seeing that structure building. There's a key core wall at 145 into the weekly, and on the monthly, we have levels stacking at 140, 145, 155, and 160, with the stock currently around 136. This is the kind of name that can move fast, even 10% in a single day. So I'm watching it closely from the start of the week. Now, on the bearish side, if the market starts moving lower, those are the names I'm watching. First is Broadcom. I'm still seeing downside positioning here. Into the weekly expiration, we have put walls stepping down from 300 to 280 and 265. And on the monthly, that structure expands to 250. So if this stock loses the 300 level, it can open the door for a move lower into the 265-250 zone. Second is Netflix. There's a clear core wall at 100, both weekly and monthly. With price currently just below that level, I'm leaning toward rejection rather than continuation. On the downside, we have put walls at 95, 90, and 85, which could act as a roadmap lower, especially after the strong move we saw last month. So again, it's not about predicting which one will happen. It's about being ready for both and knowing exactly where to focus when it does. And there's one more piece here that deserves extra attention because it can completely shift the narrative this week. I'm looking at oil to USO. Into Wednesday's expiration, there's still a significant core wall at 140, with price currently around 138. So short term, there's still some resistance above, but the real signal shows up in the weekly expiration. We have two dominant put walls at 118 and 108, both with around 10,000 open interests. Those are real levels, and what that suggests is the potential for a sharp move lower in oil, possibly even up to 20% move into the end of the week. And that matters because oil has been driving a lot of the inflation fear in this market. So if oil starts to reverse and move lower, that pressure comes off, and it can directly support equities, especially this week where inflation expectations are already high. Even a slight positive surprise in the data could fuel a strong move higher in stocks. So this is something I'm watching very closely because a reversal in oil could significantly strengthen the bullish scenario. Well, before we wrap up, I want to add something new to those weekly videos. Every week, I'm going to give you one psychological edge to improve your trading. And this week, it comes down to two traits. The first one is patience, real patience, not waiting and hoping, but knowing when not to act. And the second one is the ability to execute without hesitation, when the moment is right. Because for a good trader, the right moment is not random, it's prepared. A good trader doesn't guess. He prepares for every scenario in advance and knows exactly what to do when it shows up. That's why there's no hesitation, only execution. And you need to stop scrolling, looking for someone to tell you when to buy and when to sell. If you want to be part of the 5% that actually make money in this market, you need to start learning a real method. Not patterns, not signals, a method. If you want to see how those scenarios play out in real time, I'm updating everything during the week to the shorts. So make sure you're following. We're on the way to 1,000 subscribers, and once we get there, I'm starting live trading. But understand this, live trading is not going to be fixed to a specific time, because a real trader can finish his day in 30 minutes, or stay in the market for the full session. 95% of the job is observation and preparation. The profits come from the execution. That's where the edge is built. Execution is just a result. So if you're here to learn how to actually approach the market, you're in the right place. Positioning first, price second. I'm Roy, wishing you all a green trading week.